Big pharma stocks are bloated, overpriced, and everybody already owns them. Meanwhile, there's a healthcare stock expected to grow earnings 38% that nobody's talking about. That growth pace may actually prove to be on the light side given that they have averaged a 33% earnings beat the past few quarters. This is my number one under-the-radar healthcare pick right now, and I'm going to show you exactly why it's a screaming buy opportunity. If you like stock pick videos like this, go ahead and press that like button down below so I know to post more of them. If you're wondering who I am and why I'm worth listening to, well, I'm Steve Reitmeister, and I've been investing since 1980 with over 4 decades of real market experience. I spent 16 years as the editor-in-chief of Zacks.com, sharing valuable insights with millions of investors. Today, I'm a partner at WallStreetZen.com, where our quant team analyzes thousands of data points to help investors understand and outperform the market. I'm into solid fundamentals, meaning I don't chase hype or hot tips. But enough about me. Let's explore this under-the-radar stock, Amneal Pharmaceuticals, with a symbol of AMRX. This is a pharma company benefiting from a trend that not many people have noticed. What trend is that? The fact that generic drug makers are quietly winning the game. That's because as healthcare costs rise, demand for lower cost alternatives is accelerating. Case in point, the generic injectable market alone is on track to reach $101 billion by 2030. Yet Wall Street stays fixated on the big names like Pfizer and Merck, overlooking the companies actually benefiting from this growth trend. That's where Amneal comes in. It's one of the biggest U.S. generic drug manufacturers with over 280 product families. They focus on complex generics and biosimilars. These higher barrier drugs enjoy better profit margins. But the real story here is that Amneal has seriously cleaned up its balance sheet, drastically reducing debt, all while revenue is surging year over year. The turnaround is real, and Wall Street has not fully priced this in yet. So let's talk about the stock. Now, I know what you're thinking, Steve, generic drug stocks are kind of boring. You're right. But boring can be very profitable when execution is on point, as is the case here. First, let's talk about the growth story with AMRX. Amneal's top-line growth accelerated in Q3 with a roughly 12% increase year-over-year in revenue. That's a nice start. On its latest earnings report, they also raised guidance in some key areas, including earnings per share, adjusted EBITDA, and operating cash flow. A big reason for this is that their specialty pharma business with the higher margin neurological products grew 16%. But here's what really caught my attention. Their generic segment grew 56% in the second quarter. That's because several products are gaining serious traction. Was the smart money have to say? Well, right now, all the analysts we follow on Wall Street Zen covering the stock rated as a strong buy. No holds, no sells, just all strong buys. For example, Glenn Santangelo of Barclays just upgraded the stock from a hold to strong buy, the price target of 15. But to be honest, 20 seems more accurate given their earnings momentum. As a quick aside, if you want to know how I found AMRX, I'm using Wall Street Zen's quant rating system, the Zen Ratings. I didn't stop with AMRX. I used the same system to identify 3 stocks that have the potential to double this year. Check them out now. Just click the link in the description below to get these picks for free. Let's move on to some of the other reasons I like AMRX. Looking at the Zen ratings, you can see that AMRX has an overall grade of A, which means strong buy. Note that only the top 5% of the 4,600 stocks analyzed with the Zen ratings are affixed with an A rating. In this case, AMRX is actually in the top 1%. Looking at the 7 different component grades of the Zen ratings lets you take a more granular look at the unique qualities of any stock. Here we find that Amneal is in the top 10% of stocks we track for growth. That's based on a review of 22 different factors that point to consistent growth and greater likelihood of earnings beats ahead. Momentum is also strong, pointing to this being a very timely stock. Value isn't far behind. AMRX ranks in the top 13% of stocks based on a review of 21 value factors like estimated earnings yield, price to earnings growth, and cash flow yield. It's rare to see healthy growth, attractive valuation, and positive momentum in just one stock. This is what makes AMRX so uniquely appealing. By the way, I'll include the full industry ranking below if you want to compare other pharma stocks. But I want to be real. There are always risks with any investment. In this case, generic drug pricing is under constant pressure as the FDA keeps approving new competitors, which can squeeze margins. The business is also concentrated in a handful of key products, so losing share or seeing biosimilar approvals delayed could harm future results. And like every pharma company, regulatory and political risk is always in the background. But here's why the setup for this stock works. Amneal has staying power. With its improved balance sheet and healthy store of operating cash, it can absorb setbacks that would crush weaker competitors. And its push into specialty pharma reduces reliance on any single drug. This isn't a gamble. This is an investment in a proven management execution, growth, and valuation, not a quick trade. If you ask me, AMRX looks like a stock with the potential to double in the next couple of years given its special fundamental profile. This is especially true if it keeps up with those robust 33% earnings beats. If you want more pharma stocks and top picks like this, then hit that subscribe button down below. Every week, I'm breaking down what our quantitative system finds before the crowd does. And speaking of the stocks the market's missing, I want you to check out my video about 3 penny stocks to buy now, featuring under-the-radar picks that have the potential to surge.